following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. The first chart that we have in here today is that we are looking at the chart of Cisco on a long-term basis. I put this up because they are laying off 14,000, 20% of their people. Folks, that's got to be some type of a warning sign. I don't know what it means, but to get rid of 14,000 people when your stock's at a nearly all-time high is it just doesn't sound right. I can understand maybe getting rid of 5%. That wouldn't be a problem at all. But 15%, they've got to be ever. That would be just totally. Just totally amazing. I just don't understand that. Now, if we take a look at Cisco on a little bit shorter term, over the last 5 or 6 months, you can see we're making a 3 drive to a top pattern up here at this 31 and change level. So that in itself would tell us we'd probably be looking at some type of a correction, but that just falls in line with all the other relationships that we talked about on Monday. We had a 1.27 in the Dow, a 1.618 in the NASDAQ, a 1.27 in the New York Stock Exchange Index, a 1.618 in the DAX, a 1.618 in the Hang Seng, and a 1.27 in the SPY, plus we'd already come off better than 5% of the 1.618 on the utilities. So all of these ratios have seen significant turndowns this week. I mean, it's still early and they could make new highs, but the fact that it went up to those exact numbers and backed off tells us that, there might be something up here that would be very, very interesting. There was a really incredible show by Basil yesterday that he put on, just absolutely really wonderful information, but a couple of things really stood out in there, especially the stuff about the skyscrapers and all of his technical charts. But he made a comment that he had met someone playing tennis and that they had not talked about the stock market to anybody, and I'm seeing the same thing. I play Texas Hold'em tournament poker, low limit, of course. You buy in for like $100 or $200 and play against 100 people. But usually at those tables, you have some professionals, and they always talk about the stock market. But coming to think of it, it's been many, many months, even possibly a couple years, where no one's even mentioned it. Or not. I mean, it's just totally no talking about it at all, and that could be related, to the fact that we're seeing very, very low volumes, and the low volumes, not surprising. And my opinion is, when I started doing this trading stuff, 50 some years ago, we only had a few things to trade. We had like 25 commodities, and about 1,500, 1,600 stocks. And, we did, and some bonds, of course, but we didn't have ETFs or any of this other stuff. But there's hundreds of thousands of things to trade now. And I think it might just be diluting it down. And when you look at all across the globe, maybe it's diluted down a little bit, and that's why we're not seeing much volume. I noticed that Mohammed El-Arian was on today. He was the former guy at PIMCO. And, that pretty much put Bill Gross out of business, but or it didn't put him out of business. It moved him on to another company. But he's mentioning that this is the new normal. I don't think so, folks. I think we're still going to see some activity. I mean, I've been looking at these charts for a very long time. And when you get a VIX index that's down here and nobody is worried and it's so complacent like it is right now, that's when you have to be the most observant. Now, I've posted a link in today from our good friend Norm Winsky. It's from Wikipedia, showing you the lunar eclipse that's out here starting tomorrow. And Norm mentions that lunar eclipse have a high probability of causing, a market downturn. And of course, we're not. I could hardly call this a downturn when you're down 1.5% in 3 days, but at least it started in the right direction. But we do have this lunar eclipse coming in tomorrow, which would be very, very interesting to watch. But we've hit so many of these big ratios on the upside that it's, extremely important. One other note, I noticed that Apple is going to build their largest research facility, and guess they're going to build it in China. Well, Tim, guess what? You live in the United States, and we need jobs here. Why don't you build it here? Don't worry, Tim, I'm not going to apply for a job because A, I'm too old, and B, I don't have any idea what you guys do. But why don't you build it here? There's some wonderful people up there in Redmond, Washington that could look at jobs, and if you put it someplace else in the country, the people need jobs there too. I can understand putting it there because there's a lot of smart people in China, and they'll work for a whole lot less than they will here. But we'll have to wait and see how that works out over the other part of this. Now, we also noticed that Paul Tudor Jones is cutting back 15% of his sales force, which that only happens to be about, or it's not sales force, but his people, which is about 60 people, which isn't very much. But, some people have redeemed over $2 billion of the $6 billion that he had been managing. So you can see some of these hedge funds are also complaining about the lack of volatility in the market. And, that if you talk about lack of volatility, folks, if the foreign exchange markets traded like the stock markets, they'd be out of business in about 3 weeks. We get more action in the euro and the Japanese yen and the British pound and the Australian dollar and the Swiss franc, any of those. We get more action in that in the first 30 or 40 minutes of the day than we get in 2 or 3 days of the S&P 500. We get $1,000 moves in the euro all the time. We haven't seen a 20-point move in the S&P since Hector was a pup. And Hector was in school with Moses, so that's been a long time. So this volatility is, like having a shirt with a back pocket on the outside, or on the back side. It's just absolutely worthless. There's just no volatility. I think it's going to change, but right now there isn't anything in the foreseeable future to start to see it, whether it blows up to the upside, which is always a possibility, or, has a sell-off, which will be a great buying opportunity, I'm sure, but that's what we're watching. Basil made a wonderful case for new highs coming, and, we're only a few days away from the new high, so that's certainly an easy possibility to see. Now, we did hit a bunch of these ratios that we talked about on Monday, but remember, they have not backed off very much, since that time, to really to pay very much attention to it. So that's part of the key of watching how these things do. The one that has come off quite a bit, and I wanted to post it to let you folks know, because we talked about this several times in the past few weeks, that we did hit that 1.618 expansion, as you can see up there in the Dow Jones Utility, up at that 725 level. We're now down at, we closed at 673 yesterday. The fact that we've had this really sharp down move over the past several weeks tells us that, yes, that's probably it. And that's one of the reasons why we're seeing the bond sell-off, because these are sensitive to interest rates. When your move in the utilities is down, that means the move in the bonds is down, because rates are going higher and not lower, where people are searching for these. So we'll take a little break here. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I posted a chart of the Hang Seng, and as you can see, it's also off 1.5% after hitting that 1.618 expansion. I'd like to expand on something here, folks. What I do is, I'm a chartist. I'm a pattern recognition person. That's all I've been doing for the last 40 years. I mean, I started, well, more than that. I started learning this stuff back in Don Mack's office in Los Angeles, right on Sepulveda and Little Santa Monica Boulevard. He had the largest investment center bookstore in the world. He sold it for over $1.5 million 25 years ago. But I had became friends with Don because his mother was a diabetic, and I worked for Eli Lilly. I set up research grants for Cedars-Sinai, City of Hope, and UCLA. And what happened was, finding out that his mother was a diabetic, I called our medical department and got her a lifetime supply of insulin. And he befriended me because of that and allowed me to have free access to the whole library. He gave me a copy of the Gartley book. It was a photocopy, and at that time it was 25 cents a page, and it was 500 pages. So, you're talking serious money back in 1971. But that got me to the Gartley book, and I got a lot of other books. John Hill happened to be my mentor from 1970. I met him in the spring of 1970 up in San Francisco at a Jim Hurst meeting where they were talking about cyclotech and the cycles and stuff like that. And Gertrude Shirk was there from the Foundation of Study of Cycles. And I got to meet her and, a bunch of Peter Elides and a whole bunch of other folks. And the books that I went through were just one after another. George Cole, The Key to Speculation. If you remember the book, Edwards and McGee, well, McGee's father-in-law was Schabacher. And Schabacher was one of the really strong technical people in the era of Jim Wyckoff and also W.D. Gann and a whole bunch of other people, and they wrote some wonderful books. But Schaubacher was the father-in-law of McGee, and McGee's still alive. He's in Boston. Well, he was last time I talked to him, which he was 93 at the time. That was 2 years ago, and I still think he's going strong. But all that technical stuff is related to patterns, and all I do is I look at the charts, whether it's a bar chart or a candlestick chart, and I measure the ratios and proportions and, put the patterns in perspective, and we give them exotic little names like, 3 drives to a top, or like Linda Bradsky calls them, 3 little Indians, or whatever you want to name it or anything, a Gartley, a butterfly, a reverse point wave, a 1-3-5 pattern. Any of these, you can have names to them, but they're all related to patterns and ratios. And that's the main thing of what we're looking at. So that's pretty much the same thing. Someone's asked the question, how did I get to California from Indiana? Mr. Z, in 1972, when I was graduating from college, I was getting my degree in pharmacy, and I looked up at the bank, and we had our first digital clock at the bank. And I worked at a hospital from 11 to 7 as a scrub nurse, and I looked up at that bank, and it was minus 22 degrees. And I said, Bubba, this is the last time you're going to see that minus 22 in your lifetime. And I went to work for Lilly, and the first place they sent me to was to the West Coast, to look at, some of these places like Cedars-Sinai. And I was still trading along the way, but, it was really a lot different of the thing, So that's it. Never got tired of Indiana, though. That's still my home. My sister's still there, the same place. Nothing's changed. Still talk to my buddies from, Indiana and Terre Haute days, but that's pretty much what it is. Anyway, that being an OR technician was, really a lot of fun because I learned a lot about medicine, and then I went in to get my master's degree in an MBA, and then I also got a degree in finance, but that's how I got started in this trading. But it was during those years when I was with Don Mack that I learned all these patterns, and John Hill fortunately led me to the books that were the most important to look at, books by Livermore, who was a great tape reader, and stuff like that, and that's pretty much how I started to do it. But my real breakthrough, of course, when I went to meet Bryce Gilmore back in 1988, and that was the big change because he showed me the geometry of the markets and how it all fit together. I only had bits and pieces of it, and that's what the problem is. What I believe, the Elliott Wave people are only looking at bits and pieces. They're enthralled about making these counts of 1, 2, 3, 4s, and 5s, or whatever they want to call them. But to me, they're very, very hard to understand. And if you get 3 Elliott Wave people in the room, and believe me, I've had that many times up at the trading house in Pismo Beach. I'd have Bryce Gilmore there. I'd have Glenn Neely. I'd have Bob Miner. And they'd all be arguing whether it was a 2 or a 3, and I'd be in there trading because I could see a ratio that gave me a positive expectation, and that's really what you're shooting at. That's neither here nor there, but remember, when I show you these things, they're only probabilities. I mean, they fail often, but they do work some of the time. They work more than they fail. That's the main thing. And if you can do that and can control your risk within limits, you should be okay. But you got to understand that this business is, believe me, a minimum of 85% mental. And if you don't think that, you're going to be in for a rude awakening, because that's the real key to looking at it. Someone asked me what my job was at Eli Lilly. I was a marketing associate in cephalosporin antibiotics. These were new antibiotics that were coming out in the 60s that were very, very safe, and they were coming out to replace chloromycetin, which was a very, very powerful antibiotic, but very, very toxic. So that's how I got interested in that kind of stuff. And I was with them for 11 years, and then after that, I've been trading all those time, and got to the point where it was costing me more money to go to work than it was to work, so it was time for me to trade, and that's what happened, and so I started trading. But anyway, that's basically the bottom line of that. But there was a lot of studying in between, and what was good, because when I was working at Drexel Burnham, anytime I wanted a book or a research paper or to go to a seminar or anything, they backed it right away. And so when Don was starting to sell off his collection, I was able to buy some of the really fabulous books that he had for sale, and Drexel was kind enough to pay for those. Both Jim Twentyman and I, because Jim worked with me at Drexel, we were able to get a lot of access to these books, and we were talking about hundreds of books, folks. And they're really some of them are very metaphysical, which are really fabulous too, because it shows some of these ratios and some of the really weird stuff. But you don't really need to get into that. All you know, if you have to do is just identify a little pattern that you like, and try to stick with it, and that's really the bottom line, and you'll be able to see it in what you're looking at. Yes, you can make more in one day than you can make in a whole month, but Duffy, if you do it wrong, you can lose more in one day than you can make in a whole month, and that is the key. Don't be concerned on how much money you make. Be concerned on how much money you can lose. That is that's the real key to investing. That's what you want to really learn. And this is why these people are making a bad play in this interest rate market. They're worried about the return on their money. They're not worried about the return of their money. That's why they get these utilities and stuff way up. And junk bonds, look at junk bonds, for God's sake. Junk bonds have been rallying like crazy. I mean, this is ridiculous.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I want to talk a little bit more about the lack of volatility in the stock market, and I'll do that through the eyes of the euro. As you can see here, this is a chart that we're looking at on the euro. We're looking for it to get up to that 113 and change level, which is in fact what it did. And you know, you're talking about a move yesterday that was well over $1,500, the equivalent to 30 S&P points. We haven't seen a 30 S&P point move even before Brexit. So this is really interesting. If we look at the euro, even over a shorter time period, over an hourly, which is the last 4 weeks, you'll see here that we've completed that big ABCD up there perfectly at that 113.25. The high was 113.22. That was the exact 786 retracement of the high that we made back in July. So we're still in a slight downtrend in this, but at least we're getting really good volatility in the foreign exchange markets as opposed to what we're seeing in the other markets, and that's that's important because you make your money here off movements. You don't like to see anything lay flat like it's been doing in stocks for quite some time, and that's the real key here. Now, if we switch over and we look at the U.S. dollar index, which was one of the things that we were watching here, and no, you asked me. The question is Larry bearish on Cisco? I don't have a. It's made a 3-drive pattern in Cisco, so it certainly should sell off. Its last I saw was 31 and change, and that's mainly. I made a beautiful 3-drive pattern that I posted here in the den just a little while ago. But right now we're talking about the U.S. dollar index and the fact that we're getting some good volatility in the currencies. You notice that we had 5 ratios back on the 25th of July. I mean, there were 5 major ratios just spot on there. I mean, that's the kind you really like. 3 ratios are really nice. When you get 5, you really have to stand up and pay attention. And we're getting down near this 94 level in the dollar index, and that is really going to be key, because if you look at that, there's a 78% retracement there, and it's also the 135 pattern going back to the low in May, the low at Brexit, which was on the 24th of June, and where we are now. So keep your limit minders working in the dollar index at around the 94 level. That will be equivalent to roughly 114.20 in the euro, and the euro, remember, is 53% of the dollar index. So you want to be able to take a look at it. Cisco is CSCO. I will post that chart in for you again, Duffy, so you can take a look at it. It's good for everybody to see it because it's a beautiful pattern. Another one of these 3-drive patterns. As you can see, this goes back to the March to April. Market made a 50% retracement, made a new high, backed off exactly to the 61% retracement on the Brexit date. That was when it was trading at 27, and now it's rallied 15% to make a new high at a 1.27 expansion of the high we made, way back last year. So this is telling us that we should be in an area where we're getting ready to have a correction. And if you look at the last 2 corrections we had in Cisco, we had one from April to May where it dropped $3 a share, roughly 10%. And then we had another one in June where it dropped $2.50. So somewhere between $3 and $2.50, which would get you down to around the 29 level or 28 level, say 28 just to be safe, and that would be a 61% retracement off of the low from the Brexit date of the 24th of June. That would bring it in around 28.80 in Cisco as a potential retracement level. And if it gets to that level, it should have some pretty strong support, and then you'll be able to decide whether the market is going to hold that level or not. But we backed off just a very small amount from where we were on Monday, but still it's 1.5%. But the key is, and I should repeat this about every 2.5 minutes, but I won't, other Mr. O'Brien will kick me off the air. But we hit on Monday, we hit 1.27 in the Dow. We hit 1.618 in the NASDAQ, 1.27 in the New York Stock Exchange Index, 1.618 in the DAX, 1.618 in the Hang Seng, and 1.27 in the S&P. And those are just the ones that I follow and check. I'm sure there's others, but that means it's going to be a pretty significant spot to see what's going on. Oh, we've got one of our favorite people on the line, and I'm glad to hear from Brent. Are you there?
I am, Larry. How are you?
I am good, my friend. What can I do for you?
Bear with me, I'm on a hike, so this isn't like one of those crank calls with the heavy breathing. It's just me on a hike. So.
I used to go into that heavy breathing stuff, but it's way beyond my pay grade now. I just don't remember why I liked it. That's the problem. What can I do for you, my friend?
I want you to take a look at Procter & Gamble PG. It looks like it's got a similar chart to your Cisco chart, a 3-drive to the top, and also look like it's complete maybe an AB equals CD as well up there at that top it just did a couple days ago.
This is Procter & Gamble. That's PG, correct?
Yes.
Cincinnati, Ohio, as I recall.
Could be, yeah.
I believe that's where the home office is. It's pretty close to that area, if nothing else, but we'll watch here to what's going on. I'll see if I can get the chart up, Brent. Where are you hiking anyway?
I have a trail I've been hiking for, 26 years now, I guess. It's actually pretty amazing. It takes just the right conditions, but if you have it clear enough, I can see the Sierras from the top of the little mountain I go up on top of.
Wow.
Yeah, but it has to be, really clear. It has to be, when they're snow-capped, I can see them. So,
wow.
Pretty neat.
That is really cool.
And there's, yeah.
What the people are asking me, what trail are you on?
I got to keep that one a secret.
I think I know what that is. I think it's the trail to Taco Bell.
It's actually a place called Mount Wanda. It's named after John Muir's daughter. He used to hike this trail back in the day. So yeah, it's gotten more popular. I come up now early like I'm doing, so kind of beat the crowds up here.
Well, that's good. Anyway, what I'll do is, I know you're not able to pull the charts up since you're on the trail, but I will get that out to us today, and we'll take a look at Procter & Gamble. For some reason, when I click on my my charts to pull, there we go. You're right. It does have a beautiful 3-drive pattern. In fact, it's already topped. It topped on Monday also, but that was a beautiful 3-drive pattern up there at that 87 and change level, and I'm pretty sure that the folks here. Just a second here. Let me put the pattern in so that they can see it, and then I'll drop it into the Tiger's Den to everybody look at. But it is a really nice. Wow, that's a flat-out perfect 3-drive, no question about it. So we'll get this into the den so everybody can take a look at it, and we should be okay. Now you take care of yourself up there, okay?
I will. You too, Larry.
Hey, Brett, do me a favor. When you get back, drop me an email. I wanted to ask you about something, okay?
Sure, you betcha.
Okay, thanks a lot.
All right.
Okay, we're going to take a look here at this pattern here in Procter & Gamble. We'll pull it up so we can take a quick look at it from, yeah, he is really hiking. Yeah, he's really hiking up there. So anyway, this is the pattern that you're looking at here. You'll see that it's made a 3-drive pattern with the 1.27 expansions up here. We've already backed off to a 61% retracement already today from the low that we made back on August the 5th. So we'll see what's happened. Remember 2 things, folks. We have the FOMC working today, and that's always crazier than a, back shirt pocket. So be careful.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we're going to take a look here at this E-mini S&P. As you can see, I've drawn in the ABCD pattern here with that big blue thunderbolt, as you can see, and the C leg of that, of course, is a 382 retracement. That's the one that occurred at the 2182 level last night, and now we're 10 points below that. But the important thing is we've broken below the previous support at that 78% level, which was at 2174. And as you can see, this sets up a price objective somewhere, ABCD structure, at the 2164 to 2168 area is what it could be. That should be major support. Anything below 2160, it's via con Dios, and that means goodbye, because then you're really going to be accelerating to the downside. But it has to get there first, of course. The key is that we've come off all these major numbers, for quite some time now. We do have FOMC today. Should we remember that a dozen times at least, because it's very, very important. And the other thing is that we do have the lunar eclipse tomorrow. I posted a site in from Wikipedia on lunar eclipse for today. If you have an interest, just go to Wikipedia and type in today's lunar eclipse. Norm Winsky was kind enough to forward that on to us, and it shows that, it's very important. And Norm mentions in his daily letter that he sends out that the high probability of the market going down into a lunar eclipse is one of the more powerful signals that we could ask. Now, I've had someone ask me a question about some of these astrological charts that we look at that look so crazy. I'm going to post one. This is a transit chart, folks, going back to 1929, and I want you to notice that on the bottom side of this transit chart, you see nothing out there other than Saturn and Uranus way on the right side. I mean, this is showing that all the stuff is happening in the top part of the chart. This is the same type of chart that we had on March the 9th of 2009. Oh, everything was in the first 45 degrees, first 90 degrees of this chart. There was nothing on the other side of it. So that's what we look for is when we're watching for these major bottoms. And we were doing the research on this way back in the 80s. That's 1980s, not 1880s. We found that whenever you had these major bottoms, you saw these particular transit charts, and you still do, to this day, you see quite a bit. So what I usually do is I look to see what's happening on key days. And as you can see here, we're going to put up today's. Well, it's actually for today and tomorrow. You'll notice that we do have the planet starting to move to one side of the quadrant here, but we'll follow that as we go along to see whether that happens. This is all experimental. And no, it wasn't the 1780s. That's your time, Philadelphia, Mr. Z. They were building those little concrete streets that are so hard to get up and down anymore. Anyway, this is what we're keeping an eye on here. Is this lunar eclipse that's it's due tomorrow on the 18th. And don't forget, we're having a big birthday party for our former president, Bill Clinton, on Friday. He will be, I think, 69 or 70 years old. I think he's 70 now. He's a year younger than his boss, Hillary, and so we'll see how that works out. Now, let's get back to the currency markets, because we've got one currency that is very, very close to, I think, a potential bottom. And I'm going to bring this up and talk to you about it here because this is the British pound. As you notice here, this is a monthly chart, going back over the last 7 years. And the low that we made in the British pound was back at the Plaza Accord back in February of 1985. The pound hit 85 at that point before rallying to 200, up to 2 and change in the early part of the 2000 when we first started to have the euro come out. The euro came out in 99. I believe it began trading in around 2000. And we'll see, how that happens. I know it was around 2000 because my grandson just turned 16 yesterday, and that was the present that I got for him. I got him the coins from all over the 22 different countries, a full set of each one of those coins. I had students in every country, and they were kind enough to send me the euro coins, and some of them are just absolutely beautiful, and it's a complete collection of those. I don't know if it's worth anything now. Well, it should be. It's about the same price as it was then. That was about 85, and we're at what, 112. So not too much difference. But this pound has got a real chance in here. As you can see, there's a possibility we could get down to the 125 level. That would be a 1.27 expansion of the move from 2013 to 2014. But we've completed the big ABCD pattern on the monthly chart, and I think that's an important one to look at. If you remember that point C up there, folks, this was one of the things it was March of last year. We had 5 ratios coming together at 158.55, just like we had 5 ratios in the dollar index up at that 99 and change level. So that's 98 and change, excuse me. So that's why these ratios are so important. When you have so many of them come together, it means that there's many cycles that are coming together, at the same time, and that's the real key, to sort of keep an eye on the things that we're looking at here. We've had a question about the bond market. We're having a little rally here. We rallied almost 3/4 of a point here this morning with the fact that the stocks are getting hit a little bit, but these bonds are looking more and more suspicious all the time, folks. They are really beginning to look like they want to move a lot lower. We're very, very close to the low we made 2 weeks ago at 170.20. We got down as low as 170.28 today. And if we get below that 170.20, that sets up another 3 or 4 points to the downside. And then you start breaking some major 61% retracement levels. And then you're looking at some really serious problems in the bond market. And you don't want to have anything to do with bonds if they get below that real key level that we were watching just a few days ago. That's what I think is important. But one or the other, you'll have to wait and see if that's going to be the case. Now, give me 1 second here, and I will get this bond chart. Here it is, and we'll put it up here so we can take a look at it, and we'll see what we're doing here. And you'll notice how important this 170.20 level is, because we really have not rallied very much over the last week or so. And if this was a really bull market, it would have gotten back on track right away. The thing is that these bonds and stocks are going down together, and that's not a very good thing. I had one other statement about the Dow theory that we talked about yesterday. Richard Russell was the guy that made it so very, very popular. And one of his key things was the transportations. And if you look at the Dow Jones transportations here over the past 18 months, you can see they're in a profound downtrend. We've had 1, 2, 3, 4 major Gartley patterns during that time. All of them were big sales, and we've got another one right now. We're still considerably lower. We're just at a 61% retracement of the high from July 5th. So this is a market that is under a great deal of pressure. And then when you look at what the utility index is doing, coming off that 1.618 on the weekly, that's also telling you maybe pay a little closer attention to your portfolio here, because maybe the market will roll over here and possibly have an outlier event and actually surprise someone. So we'll have to do one thing at a time as we look at this. But right now, we're going to pay a few bills for our leader, and then we'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've posted the chart of the banking index into Tiger TV to show you how weak it is. These used to be the leaders on the way up, and as you can see, it topped a long time ago. If we go a little bit deeper here and look at the biotech index, you'll notice here that the biotech index is even weaker. And just last week, we completed a 38% retracement of the high that we made back in July when we made that big island reversal. Then we had the big ABC to the down move in January. And since January and June, all we've been able to do is make a 382 retracement of that high from way back in July. It's also a 50% retracement from the high we made in January of this year. So these are also numbers that are telling us that we've run into some pretty steep resistance in some of these indices that we're looking at, along with the ones that have hit the major expansions. Remember, those major expansions are only about 150 stocks. You're talking about 15 Dow stocks at about 100 S&P of the 500 S&P stocks, and probably 30 of the NASDAQ 100 stocks that are in there moving this stuff. So you're talking 150 stocks or so that are moving the market, and in fact, that is not the case. In fact, I've seen statistics that say that NASDAQ, 15% of those high flyers really control most of it. That's your Amazon, Google, and Facebook, and some of the others, Amazon, and of course Apple. So those are the ones that you've got to keep an eye on. But right now, we're just having a very small correction from the high. We're now down 20 handles in the S&P after 3 days. If it starts to accelerate a little bit and we get below that 2160 level, then we know that there's serious problems here, and we'll have to be looking at more to the downside. But this is what we're watching. Remember, we do have this lunar eclipse and a full moon tomorrow on the 18th. So that will be most probably some type of a trend change day. And since we're coming down into this, one would think we'll have some type of support here in the market, to take a look at it. That's primarily, the technical picture of what we're looking at. Because when you're doing it, you're looking at it shorter term. 877-927-6648. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.